Let's welcome Peter back in to fill us in. Peter, I didn't think I'd see you so soon, but another bank, another shoe drops.
Yep.
How many more? Do you have any prediction, and how bad is it going to get?
A lot more banks are going to fail. This is just the reality. This is the mess that the Fed made by keeping interest rates so low for so long. This is what enabled the banks to load up on all this low-yielding, overpriced long-term debt, treasuries, mortgages. And government regulators actually pushed the banks into these securities with favorable accounting treatment for government securities or anything guaranteed by the U.S. government. You know, the problem is that we shouldn't even have an FDIC. You're talking about how they might want to tweak the coverage. How about abolishing the FDIC and let the free market handle banking? We'd have a much more solid banking system if depositors knew that their deposits could be lost at a bank that was reckless and took a lot of risks. And then those banks would be under competitive pressures not to take those kind of risks. There's no other industry that's like that. The government doesn't guarantee your money anyplace else. So why should they guarantee it if you put it in a bank?
Yeah, that's a great point. And I'm looking at the different scenarios going, wait a minute. So a business account is more important than mine. If they do the targeted one, they get higher backing. It makes no sense in a capitalist system. What worries me is we keep seeing this happen. How many more every 10, 20 years are we going to see the greedy mortgage lenders of the banks get risky, do what they shouldn't be doing, and then the government bails them out so they can survive? A couple of the weak ones get canceled and fail, like these banks, like Silicon Valley and this latest one. And then another 10, 20 years, we do the same damn thing over and over again. Because it seems like a cycle to me.
Well, you know, we're supposed to have a capitalist system. The problem is we've corrupted it with socialism. We've socialized the banking industry. That is the source of the problem. And we've also socialized interest rates, because the Federal Reserve is like a Politburo, and they just pick an interest rate rather than allowing the market to discover the appropriate rate. And when the Fed sets interest rates too low and prints a lot of money in order to make that possible, it unleashes massive inflation, creates tremendous economic imbalances that result in financial crises, depressions, when the bubbles burst. That's where we are right now. And I think this is the last straw here, because I think the Fed is going to have to unleash so much inflation to try to prop up all these banks and the U.S. government, which is also insolvent, that is going to unleash runaway inflation. And that is the real problem. Nobody's money is safe in any bank, because even if your bank doesn't fail, it's going to be bailed out through inflation. So you might not lose your money, but your money will definitely lose its purchasing power.
Wow, you're a ball of joy today, Peter. The Fed just raised rates again this week, didn't they? What are we up to now on the interest rate?
Well, 5 to 5.25, but that's still not enough to do anything about inflation. But it is enough to create more problems for the banks and anybody else that has debt that they have to service. You know, a lot of companies, a lot of people who own commercial real estate took out short-term loans at very low rates a few years ago. And as those loans mature and now they have to roll them over, they can't afford these higher payments, especially when a lot of their rental income has dropped. So they have less revenue, and now their interest expense are rising. And for a lot of companies that were borrowing in the junk bond market, they're not going to be able to afford to service this debt at the new rates once these bonds mature. So the bulk of this financial crisis, which just got started, is in our future. We're just at the tip of a huge iceberg right now.
Oh, gosh. Peter, I'm out of time. 10 seconds left. You know what I always ask you, though. So where do I put it? You still saying buy gold?
Gold did very well today. It's you know, back above $2,000 an ounce, 2,030.
Wow.
But this is just the beginning. It's going much, much higher than this, many multiples of its current price. So absolutely get out of the dollar, get out of banks, and get into something real, whether it's gold, silver, foreign stocks. You have to look for a port in the storm, because this is an inflation tsunami.
Yeah. And guys, Peter told me gold a few weeks back, a couple months, it was $1,400. Now it's over $2,000. I didn't take his advice.
It wasn't that cheap.
I'm an idiot. Okay, I'm doing it this time. Peter Schiff, Chief Economist, Global Strategist at Euro Pacific Asset Management. Thank you, sir, as always. Appreciate you.